Good afternoon, everyone. And thank you so much, David, for putting this event together. 3 days of amazing teaching from so many traders. So I'm really honored to be here today. Today, I will be talking about technicals because, guys, I don't know if you have noticed, but more than 95% of all the market action is literally technical. And that gives us, the retail traders, an edge, because we can learn technical analysis and be on the same pace with the institutional traders. And don't forget that algorithms are technical. They're not fundamental. They're not, some of them are news driven and they have some codes for words, but most of the algorithms out there, I speak for about 90% of them, or maybe 95% of them, are technical. So we're going to be talking about a lot of technical stuff today in my presentation. And if you guys know, I am literally the Forex queen out there that is creating and has created a system to generate income in 2 hours or less off of the New York trading session open. So when the market opens, that is where I come and play. And usually my trade duration is about, let's say at the most about 20 minutes, but I'm usually in and out super fast. And I'm going to show you today some interesting scenarios where you can get into some trades and how long you can expect to be in that trade based upon the timing of the day and timing of the market. So I'm going to be talking today about how you too can generate income and actually have above average profits trading only 2 hours a day. I also have a performance portfolio on our website that dates all the way back from 2017 when the day trading room was created. So you can freely navigate through those tabs at the very bottom and look at our performance. You have all the trades there with all the winning trades, all the losing trades, all the parameters for the trades, the entries, the stops, targets, etc., and if those were achieved or not. So we do have a track performance on that. And I'm really extremely performance driven. I have always been performance driven since I ever decided to create TradeOutLoud, which happened during the recession and during the financial crisis when I was doing a lot of pro bono work and it was taking a lot of my time. So it only made sense, to trade and make some money for my time. So my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud, which is a trading education company that is specialized in educating individuals how to day trade, swing trade, any kind of market, whether you're trading stocks or futures, whether you're trading cryptos or options. I specialize in day trading futures in the first 2 hours in the morning, and I swing trade stocks. I swing trade a lot of stocks. I'm very active, between 5 and 10 swing trades on a regular basis every single week in stocks. So I could say that I'm a little bit more active in swing trading stocks than I am in day trading futures. And there's a reason for that. When you're day trading, you have a lot of more risk. And when you're swing trading, you have a little bit less risk because you have less chances of stopping out of trades due to the fact that you have a really broader time frame. You have wider time frame, so you're less likely to stop out of trades. And I highly suggest, before we even dive into this presentation, to mention that if you're a trader, regardless of what style of trading you're adapting, whether it's day trading or swing trading or investing, I'm huge in investing. And in fact, we do teach, and we have been teaching investing since 2008 and actually 2007, since even before TradeOutLoud came about. So bottom line is that I make my income in 2 hours or less, and the rest of the money that I receive from the profits from day trading, I literally dump into my swing trading account and my investing account, because I do have separate accounts for everything. So for my day trading activity, I usually spend about 2 hours a day. So I would say from 9 o'clock to 11, from 9:30 to 11:30, that is when the London session is closing in the 11 p.m. Eastern, 11:30 p.m. Eastern, 11:30 a.m. Eastern. And that is pretty much when my activity kind of like, I shut it down, okay? Because I don't want to spend my day in front of the computer. I have my money working for me in investments. I have my money working for me in swing trading. And earlier I was mentioning that I'm a little bit more aggressive in swing trading, but that doesn't necessarily mean that I spend more time in swing trading. In fact, in swing trading, I monitor my trades less than 10 minutes a day, less than 10 minutes a day. That's how cool it is to have swing trades and have your money working for you. I specialize in high velocity moves. So what that means is that I find inflection points on the technical chart that allows the price action to snap into a tradable void and capture most of the gain through a very advanced momentum. I have been, so I come in the trading industry with 20 plus years in trading. So 20 plus years ago, I quit my job and I went into day trading, swing trading, and investing my own capital. Prior to that, I come with 10 plus years in investment banking. I specialize, like I said, in high velocity moves for really high gains, and really the fact that I don't like to sit in trades for a very long time. So I have developed a system that enables me to capture these really big momentum bursts into the market. I'm also the designer of a proprietary trading system that is based on price support resistance. But hey, there's a catch in here because I focus on A layers of price support resistance. So what that means is that I focus on correlated areas, on confluence areas. How many times has it happened to you that you found a perfect setup, you got in, and all of a sudden the trade went for you a little bit just to get you in the trade, and then it failed? Well, that is because you didn't have a sustainable support zone. You didn't have a really good foundation for your trade, because the foundation for your trade needs to come with more support zones that are going to confirm and predict the rotation area or the reversal area. I also have developed specific trigger times, and these are proprietary for TradeOutLoud. You're not going to find them anywhere on the World Wide Web. And there are companies that are literally have worked with me in the past to teach them these specific trigger times. And I can tell you that these are companies that are teaching Wall Street traders, because I have been mentored by a Goldman Sachs trader back in the day. I have spent a lot of time and a lot of money. Literally, it was more than a Harvard education. And I have literally took that system and I correlated it because I have done the research with the timing into the market. And they have adapted my system with the timing in the market. You can imagine how proud I am for that. And there are these specific timeframes that are incredible, and they work right to the T into the market and into the market inflection point. I also use specific price zones. These are not proprietary. These are institutional specific zones. Unless you have been a hedge fund manager or an institutional trader, you don't know what these levels are, and we teach them in our course. We kind of keep I wouldn't say the secret, but we want to keep the system behind them, because they're literally four price points, but they have different spins. So I could tell you what these price zones are right now, but you won't know what to do with them. And these are areas where institutions scale in or scale out, because as you know, as an institutional trader, institutional traders cannot buy a lot of contracts or a lot of shares of one stock or a contract, of specific contract, or futures contract, or have you, or even Forex at a designed price, at a specific price. They scale in and scale out. And these are their scale in zones and scale out zones. And I also look at chart synchronicity and divergency. This is something that I took from stock trading, because you have to correlate your market with the stocks that you're trading. You have to look at the market. You have to look at the Qs, the SPYs, the diamonds, and Russell. You have to put them in a leader laggard category. So you want to determine which is the strongest and which is the weakest. And you do that by taking a look at the sectors, stock sectors that are under the industry sectors that are under each index. So today, obviously, there's no surprise that NASDAQ is advancing with the outstanding earnings results that Meta came with last night. And Meta stock was up like 8-9% right before the open. I haven't looked at it since then, but it was way up there. So this is one of the reasons why NASDAQ had the most activity today, and actually had the most volume and the most chances of running higher faster. We're going to get to charts in just a few moments as well. But in a nutshell, this is pretty much what, pretty much what I'm looking at when I'm getting into trades. If you guys want to read more about Trade Out Loud, about myself or my company, what it does, you could go to our website, or you could go on social media. Our handle is Trade Out Loud. I share a lot of trading ideas on Twitter, and they're free, so you can feel free to take a look over there. So here's our agenda for today. Today we're going to talk about the basics that you think you knew, but in reality, I don't know if you did. We're going to do pre-market game plan, and I'm going to give you the game plan for free to you today of how you need to prepare. Whether you're preparing for the futures market or the stock market, it's very, very similar. So that's going to help you if you're on the stock side. It's going to help you even more if you're on the futures side. And then one of the most important things, how to select your trade, because a lot of times traders are fixated on trading just E-mini S&P. I don't know, it's just this thing like traders like, so you're a futures trader, right? What do you trade? ES. Okay, but they neglect to look outside of the box because they have not learned a system where they are, allowed to think how to look at the market and to actually go in something that is moving rather something that is not moving. And lastly, we're going to talk about what time frames to focus on when you're trading the open. This is a big thing because a lot of traders will say, oh, I trade the tick chart, or I trade the 1 minute, or I trade the 5, or I trade the 15, or what have you. So I'm going to tell you exactly what I do. So this presentation is for traders that really want to achieve above average gains. If you want to achieve above average gains, and I'm not just saying this, I put my money I put my money where my mouth is. So you can look at our performance. I'm going to show you some real performance from my own personal account. So you have the proof right there. So this is power trading of the futures market, literally in 2 hours. 2 hours is not too much, but it's really kind of an average time, because you guys know that if you sit in front of the computer for longer than 2 hours, then your brain goes on a commercial break. Actually, every 15 minutes, our brain goes on a commercial break. So I don't know if you have noticed, but after like about 15 minutes, you can't focus as much, and you try to look at a different charts, or you try to look, try to browse the web, you go on Twitter, you go on Facebook, so you try to do something else because the brain needs that commercial break. And then it refreshes, resets, because it gives you a signal that is a little bit too bored to sit and watch the current pattern or conditions or market or the chart that is watching, and that needs that little distraction, and then it gets back on track. So 2 hours is just enough to keep you focused, and then you're done for the rest of the day. I don't know about you guys, but I have had really long, when I was in the learning phase, I literally worked for trading for 10 to 12 hours each and every single day. So I would be in front of the computer around 7 o'clock, and sometimes I would work even more than 12 hours a day. That's how you get to where I am right now. That's where you are. That's what you want to do before you actually, you actually cut your trade. Because if you're going through the trial and error thing, you got to put in the time. If you want to go towards the shortcut, then there are shortcuts. You take a course, that's what courses are for. I do have a course that is designed. It is a 5-day course, and basically you're spending 90 days with me. So basically it's a 90 days masterclass, because you're going into that continuous education with me in the trading room, where I literally shape your trading. So you're cutting years, you're collapsing timeframes, you're cutting years off of your learning curve, because I'm giving you my 20+ years of experience into that course. So I am basically focused on trading only 4 charts. I definitely look at gold, look at silver, look at oil, look at bonds, look at whatever is happening in the agriculture spectrum. But my focus for day trading and my income generating method is through indices, the 4 indices. I watch the Dow, the S&P, NASDAQ, and Russell. And this is 2 hours or maybe less. A lot of times we're done at 10 o'clock. So if you're late to the game and just logging in at 10 o'clock, guess what? The room is going to be closed, shut. Why? Because we made our money and done. And also another thing that I pride myself with doing for my traders, and especially for my students, the trading room was designed for my students alone, but we actually let the outside traders hop in just to have an experience and see how we trade. So I always tell my traders, if you don't have a system that is working for you, do not take your trades. Just take the trades that I call, just my trades, period. So if you can follow directions, if you think you can sit on your hands until I call a trade and just take that trade and learn from that trade, then the trading room is for you. And pretty much a lot of the traders that come into the trading room and say, hey, I like your trades. It's not that I like your trades. I'm making money. My account is growing. Then I want to take your course. I want to learn, because that's your optimum goal. You want to make sure that you understand. So for example, maybe I'm not going to be doing this forever. You want to learn how it's done, right? And it'll be a shame not to learn how it's done. So for example, if I go on vacation, and I'm really planning a vacation in Greece somewhere in October, so I may be shutting the room down for about 10 days or 2 weeks, right? That's not going to happen, because I'm going to have somebody else that is going to supplement for me. So we have another moderator. But in any case, so if I'm not there, you should be able to trade. That's the whole idea behind this. Most importantly is that we are trading stress-free. How many times had it happened to you that you were in a trade and you find yourself that your pulse is rushing, high blood pressure, you don't know what to do? If you're in a trade and let's say it goes up, you have no idea where the target is. I know, because I'm getting questions in the trading room all the time. What did you say the target was? Oh my God, what was the target? What did you say? So I know how it is. Okay. So when you have a system that can teach you how to trade, you are relaxing, you know where the target is. Okay, so why are we all here again? Because we love money. I have to admit, I absolutely love money. First of all, I got into trading because I hated my commute time. I was working in financial industry, just like you have heard before, but I was dreading the commute time. It literally took 3 hours out of my day every single day for the commute. It was an hour and a half to go to work, an hour and a half to come back from work, because of the heavy traffic that I had on the freeways. And now I actually trade less than my commute time. I was commuting 3 hours. Now I'm only trading 2 hours. So was it worth the effort? Yes, absolutely. It's worth. So if I look back, I go like, oh my gosh, why didn't I do this earlier? Okay. And we're here because we love money. I love money. I love money. I love making money, and I love spending money. Okay, so with me, it's a love relationship with money. You have to love money. If you don't love your money, you get in reckless trades. If you love your money, then you're looking for the particular setup that is going to generate a good return on your risk. So that's why you need to love money. We are all here because we desire financial freedom. And I can truly say that, yeah, I consider myself retired. Ever since I went beyond my learning phase, I consider myself retired. For me, it's such a pleasure to trade every single day for a couple of hours and done. And like I said, some days we're done in 30 minutes, some days we're done in 2 hours, some days we're done in 45 minutes, some days we're done in 10 minutes and done. And we could hit the beach, everybody, right? So we want to make our money work for us. And this is the only way. And I'll call my charts, my employees, and I have 4 employees. I have the NASDAQ, the S&P, Dow, and Russell that are generating income. But in reality, you think that's what you want. But in reality, what is your trading account saying about you? So you have that desire to create financial freedom. But right now, I want everybody to look at their accounts and look at your account and look at how much you started with in January or how much you started with last year. And if you're on a trial and error and tried all these indicators, shiny indicators and price action and what have you, everything that is around, our trading environment these days, what is your account really saying about you? How did that system work for you? And how did the different system that you have applied work for you? Have you found one that worked for you? Have you went through your trading journal to determine what worked for you, what didn't work for you? Because that speaks volume. In order to make more money, because everybody loves money, you need to put in the effort and learn how it's done. You need to become a master trader, because if you're average in trading, then you're screwed. You're just about into the break even. That's an average trader. He sees it, but then he makes a little money, but then he loses that money. You need to become confident in trading. You need to be accurate, and confidence comes from education. Confidence comes from education. I know for sure that right now, I want to stay long in oil. Okay. I have that confidence because I know how to read the trend. You want accuracy in your trading because specifically in day trading, in swing trading as well, but in swing trading, you have like a little margin. But in day trading, you have to be super precise because the algos hit at precise numbers at precise time of the day and at specific inflection points. So you want to be accurate and be in sync with that momentum. You want to be disciplined. What is a disciplined trader? A disciplined trader, and again, discipline is coming from education. A lot of times I hear literally baloney saying, a lot of traders that are saying, oh, I don't have patience. I don't have patience to wait, so I jumped in the trade. Well, you don't have patience because you don't have the required education. Because if you have received the proper education telling you that you need to buy, for example, a setup that is coming into a support zone, whatever that is, let's say in a 20 SMA in an ongoing trend, and you're looking for a rotation, you're looking for let's say a long trade when the green candle is taking the prior red candle high, and then you're going to place the stop below. So you need to have a system. Then that is discipline. That is discipline, and that is the patience. So discipline and patience come from education. It's not only mindset, because you could have like the perfect mindset, but if you don't have the system, that's just going to go to waste. First, you need the foundation, then you work on your mindset. Once you are, and here's the thing, a lot of hedge funds and portfolio managers have performance coaches. I have a performance coach that I speak to every single quarter to become better and better and better. Okay, so you'll need that mindset as well. But what would that help me to have my coach saying, you got to be a little bit more aggressive. You got to do this. You got to do that. If I didn't have the method, I could be aggressive and say, get an early entry, not be disciplined, jump in trades. So bottom line is that you need to have the system first. And it's not a strategy. It's a whole system, because you need to know where the entry is. You need to know where the stop is, so you can calculate what your position size. And before you get into a trade, you need to assess whether it's worth taking that trade or not, based upon whether there is enough space to accommodate at least 2 or 3 times your risk amount into the specific target. So you need to determine that as well. So there's quite a bit of analysis that goes before, let's say, jumping into a trade. So that is exactly what I'm talking about when I'm talking about patience. You need to have that calculated patience, and you need to be in control. You need to have a good composure, because once you know what your entry and your stop is, you know what your position size is. Once you know what your position size is, that represents your R. So that represents your risk. So if that happens to be a losing trade, it's not going to be devastating for you, because it's going to be the same on each and every single trade. So if your R, let's say, is $500 on one trade, it has to be $500 until your account grows with at least 30 to 40%. Knowledgeable. You need to be a knowledgeable trader. Be an aware trader. See what the outside environment is like, especially now in earnings season. This is where the easy money is being made. Literally, the easy money is being made in this period of time within these, and we still have about 4 weeks of easy money. You have to trade stress-free, because once you know the system, and once you know how to allocate the risk, and once you know how many R's you're going to risk per day if you're a day trader, right? That makes it super simple, and it takes the stress away from you. You got to be happy, and when you're happy, you're fulfilled. You need to know when to trade and when to sit on our hands based upon the calculation of the trend, the patterns, price action, and locations. You need to know how to trade and how to embrace all that information. You need to know how to handle any market conditions. The hardest, and I was talking about this in the trading room today, the easiest way to trade and the easiest market to trade is a trending market, is a dominant market, because it's easy to trade. You know that you have to focus on buying pullbacks and not shorting. Newbies are shorting. Newbies always love to be against institutions. One of the reasons why they lose a lot of money is because they're always contrarians. They think that they're outsmarting what? Outsmarting the 99% of the market that is trading. You think you're outsmarting the best algo that has cost billions of dollars. You think that you're outsmarting the brightest minds on Wall Street? No, trade with the trend. The heavier volume is still to the upside. Look at where the market is right now. Where do you think the market is getting the push now? I'm just going to show you real quick. All right, the market. Okay, and these are the cues. The cues are actually right now in an hourly rotation. If the cues are going to trade over 45 right now, they're going to start snapping higher. They have a little bit of resistance into the 50s, and that's an institutional inflection point. And if they break this resistance, they go to 900. Do you guys know that I have an overall target of 16,000 in NASDAQ? It may not do it today, but it can do it in the very close future. Okay, very close future. Overall target for today is going to be 900. And you can see here that you can see the dominant trends. How can you short a dominant trend? This was just a flash sale. This is a technique a lot of hedge funds managers are using. Jim Cramer was mentioning this years and years and years ago. Maybe it was like 15, 17 years ago when he mentioned, when he was maybe more, when he was part of a hedge fund and he was a portfolio manager, that they would do this, and they would do this for the futures market. This is very common phenomenon that is happening, and this is a forced sell action into support. In this case, it's trading right into the 10 EMA, and then it's rotating back up. The reason for this flash sale, this forced sale, they call it forced sale, is because they see the market higher, they have calculations and predictions for the market higher, and they want to push it lower because they took profits. You can see here, it's psychological level of 900, and also was a resistance zone here at 900, and they pushed it lower to get more contracts. So they partially sold here, they forced the price lower, they accumulated more position to drive it back into 900 and beyond, because the overall target is into the 16,000. And it's only normal to do that, right? If you were an institution that was controlling billions of dollars, you want to do the same thing, okay? All right, so what is the trading system? Because you heard me talk about a trading system. It's a rule-based system, right? It's really a rule-based system. Finding high-odds trades, waiting for the setup, find precise execution, and you have to have really good management skills. Because what happens if the trade goes against you? You stop out. Guess what? That is part of the plan. Because if you don't have a plan, you're just going to let it ride, and it's probably going to squish you. It's going to squish your account. It's going to drain your account. That's the number one reason why a lot of traders are literally, just blowing up their accounts. And of course, you need to have the patience, right? So why are we all here? Because we want more money. We want to supplement our income, create income or wealth, right? Because whatever you get from your day trading. So personally, I started trading with $50,000, and I generated more than $5 million in my portfolio. And most of it happened in 2000 and in 2009, from 2009 to 2012. I'm trading a 500,000 day trading account for futures alone. So my personal account, my risk per trade is $5,000. I'm using 1% for each and every single trade. At the end of the month, I'm pulling out all the profits out. I'm going to show you my account very soon by the end of this presentation. So I'm pulling my money out and I'm putting them into my swing trading account, and a portion I'm buying more stocks, for example, for dividend or for growth, right? For example, I have an order in McDonald's to buy it over $300. Okay, I don't know if that order got filled or not because I'm in the presentation right now, but that is my order. I have it at 300, and that is an investment. And the reason why I love these companies is because they're generating dividends, right? So I get paid even if the price action is going to go down. Guess what? My stocks and my stock in particular, let's say McDonald's, is going to generate me income every quarter. Okay. The good thing about having a good system is that once you learn it, it's just getting better and better and better. And the beauty about it is that you only have to learn it once. Now let's talk about time and money efficiency with futures. So I have an example here for you. So it's going to be side by side. And for example, if the trader wants to buy the Qs, right, which is priced, let's say hypothetically at $300, you need about $16,000 in buying power in order to buy 100 shares on a $30,000 account at least, because you guys know you can open a day trading account with 25,000, but if you blow up on the first trade and if you lose a penny from that account, your day trading status is out the door. Okay. So bottom line is that you need to have more in your account. That's why I said $30,000 account at least. So if the price goes up 50 cents, you're going to make $50 because each cent is $1. But if the trader wants to trade NASDAQ futures, let's say hypothetically they're priced at 15,100, the trader needs about $17,000 to buy one contract. If the price goes up 50 points in NASDAQ, make a profit of $1,000 because each point is $20. Each point is $20. All right, so let me show you some examples here that we did in a mentoring session earlier in the first quarter, towards the end of the first quarter. And we did a live example. So I was in front of my traders and I said, we're going to buy at the same time. So I had a whole bunch of active trader screens on my screen, a little bit smaller than what you see here. Here I have zoomed it out for this example purpose. So I had a bunch of them, 6 of them on my screen, and I was showing traders how to trade side by side Qs and NASDAQ and how much money you can make in the Qs with the buying power allocated for a similar buying power allocated, the same, pretty much the same with the one in futures. So here's the Qs. This is the buy point here. This is a technical pattern. We're not going to talk about it. It's part of the system that I teach. And buy power in effect is 15,000 and change, right? So you can see here that I bought 100 shares of it at 306.63. And by the end of the day, so the experiment was from the entry. This was in the PM session. Like I said, it was an experiment. It was, and yes, can you trade in the PM session? By all means, you can trade. The more you trade, the more you make, period. So bottom line is when you actually have the entry here, you know how to determine your entry, you know how to determine your risk, you know how to determine your projected targets. We actually had a target in the 310. It was just at 309.25. But in this period of time from the entry to the timing towards the end of the day, we made $303 using $15,000 in buying power. Now, let me show you the next slide. This is NASDAQ futures. Buying power in effect is $17,000. Okay. Now, remember, this one was 15,400. The same entry comes in here, right? You can see here the same entry. I'm going to go here. Okay. You can see the bottoming tail and the rotation that is coming off of the bottoming tail. Here's the bottoming tail and the rotation that is coming off the bottoming tail. And you can see here the entry was 12,626. Here it is. And we took the equivalent of the buying power. So that is the one contract. So this trade generated a profit into the end of the day with one contract. Look at the buying power. Look at the contract. It's 10 times more powerful than stock trading. Here it is, $2,480. And take it from me that I absolutely love stocks. I love stocks more than futures. I love swing trading stocks more than I love futures. Okay, but I'm extremely amazing at trading futures. Okay, so this is 2,480 generated from the time of entry at 1 o'clock into the end of the day, compared to trade entered at 1 o'clock into the end of the day, $300 with similar buying power. So I'm going to ask you guys, would you rather trade the Qs with the same amount of money? So if I gave you right now, let's say $17,000, would you rather trade the Qs and make $300, or would you rather trade NASDAQ and make $2,400? The same risk, using the same risk and the same buying power. Okay, I think the answer is obvious. All right, let's move on to the next one. Here's micro NASDAQ. So for a lot of people, maybe you don't have $50,000, you know, or 30,000 or what have you, you know, to put into your day trading account. So maybe you have 7,000 or 10,000. If you have that, you could start trading micros. And no, I don't believe in those $500 accounts. Those are literally designed for the broker to take your money. So here the buying power is $1,700. How's that? You have a small account. You could take one micro NASDAQ, and you're going to make from the same setup from 1 o'clock till the end of the day, $246. Now, I'm going to show you something that is going to be striking. $1,700 in buying power here. I'm going to go back. These are the Qs. $15,000 buying power, a little bit over $15,303. Oh, Isn't that an aha moment? Let's take a look at the SPYs. Okay, let's take a look at the SPYs. It's not the SPYs. Buying power in effect, 20,000. Same entry. You can see here that the indices along with the ETFs were in sync, and they had an in sync pattern. So they were not, they were not moving against each other. Okay, so they were in sync. They were synchronized. Okay, so that is good. You're always, when you're getting a market that is that is synchronized, meaning NASDAQ is moving higher, the Dow is moving higher, S&P is moving higher. It's just like throwing darts. Just pick one and go with it. Okay, it's hard when they're divergent. For example, you have, let's say, the Dow weaker and NASDAQ stronger, and then you have an S&P which is sideways. That's a little bit rougher to trade because you don't know which team is going to win. You don't know if the Bears are going to win or the Bulls are going to win. But obviously, there are ways of calculating how to do that by using trend analysis. But here's the SPY, $20,000 in buying power, pretty much the same entry from 1 o'clock till the end of the day, $262 with 100 shares. Let's take a look at a mini SMA. Obviously, this is a little distorted here because I was already in a trade and I couldn't take myself out of the trade for the example purpose. So I was writing this. But this is the S&P. The buying power is way less than that because you can see here that I had 4 contracts in this case, and my average entry was different. But basically, the entry was the 41.35 here, 41.35. I was already in a swing trade, so I couldn't take myself out. This is my real account. I couldn't take myself out just, for the example purpose. So I just added here. Okay, and this was my average. But bottom line, the P&L for the day, from the entry to the exit, too close to the exit, I hadn't exited yet because it was not yet the end of the day, it was $3,600. So the mini S&P generated from 1 o'clock to the end of the day, $3,600, while SPYs were trading from 1 o'clock to the end of the day, $262. But wait, there's more. You have a small account, $1,200 in buying power, $1,200 required for you to get 1 micro of the micro futures S&P. And from the entry, 1 o'clock to the end of the day, $127. I don't know about you guys, but that's about 5% in using micros. Okay. So why to learn how to trade? Well, first of all, if you desire financial independence, you need to learn, you need to invest in yourself. When I dove into trading, first I invested in myself and I bought about 3 courses. I was in 3 day trading courses. It was not easy to find day trading courses. They were pretty expensive. And I have friends out there that took similar courses with me and know what I'm talking about. So I took 3 courses. It totaled to about $20,000 because I needed to invest in myself. I can't expect to make money if I don't know what I'm doing. So I need to be in control over money. You need to be in control over your life. If you really want to desire from work from home, you need to put in the effort and you need to invest in yourself. I invested in a skill that would generate high income. Okay, that would generate high income. I wanted to pay on my credit cards. Yes, I did have credit card. I wouldn't say that I was in debt, but I did have, I wouldn't pay them off at the end of each month, especially when, when I first started trading, they started to rack up. If you want to pay, luckily I didn't have any student loans, but if you want to, and by the way, guys, talking about vacations, I didn't have any kind of vacation for 5 years when I first started trading. Seriously, I didn't have vacation. I didn't want to think about vacation. I needed to make this work. And especially that we were crossing through a very difficult time in the economy, right? And I'm talking about really difficult time in the economy, and the market was even in a difficult time. Okay. This is a protection from recession. It protected me in 2008. In 2008, I was like literally laughing. I had it made. It was the time when I had it made. It was the time when I could help all my friends, friends of the friends of the friends, and I could help them confidently go through the recession. We loaded the boat in 2009. One of the stocks that made me rich was Sirius Satellite. You're going to laugh, but yes, it was Sirius Satellite. I have literally tens and thousands of shares of it. It was trading at 10 cents, guys. I loaded it up. I sold it when it was $6. Do the math on that. So you can make a lot of money. You can get rich on these events that are happening. Another event that really bumped up my accounts, and that is when I grew my day trading account, and I said, yes, I'm comfortable now to trade at $500,000, was 2020. I wasn't trading with a $500,000 account in 2020. I was trading with a $175,000 account in 2020. This put me over the edge. So events like this, you have to take advantage. Now, let's take a look and see what I focus on and what my method is all about. I'm all about market timing. So at 9:30, I don't trade before the market opens. I have no interest, zero interest in trading before the market open. Again, I have zero interest on the economic data. I want to know the reaction that the data has in price action. Do I care if it's positive or negative? No, I don't care, because I see it on the technical chart. I don't need a talking head on TV to tell me if the data was good or bad. I don't need any interpretation. In fact, when I trade, I'm in the zone. I don't listen to CNBC. I don't listen to Bloomberg. I don't listen to anybody. I don't listen to any gurus. I don't watch any predictions. I don't read any newsletters from anybody, because I don't need to. I have my own brain. I have invested in my brain to be able to perform my analysis, and that's it. And you should do the same. You should not be even listening to anybody else. You should listen to yourself, invest in yourself, learn hands down, and then take your own trading advice. So the market opens at 9:30, and that is going to be a major market timing. From 9:30 to 9:32 is the fleecing time. Sometimes from 9:30 to 9:35, you have the best fleecing time. The most momentum trades are happening from 9:30 to 9:32 to 9:35. I usually like to take my first trade, very aggressive trades at 9:32. Those are not happening very often. And a lot of times they wait until 9:45. But we're going to talk about that timing as well. Here's the execution times. These are just market timings. You have the 9:30 open, you have the 10 o'clock, you have the 10:30. Okay. So my execution times are correlated with the market timing. My first conservative entry would be around 9:35 if the pattern is there. If the pattern is not there, I just skip it and just focus on the 9:45 or around the 9:45 time. At 10 o'clock, you also have another execution. So for example, if the market shoots up from 9:30 to 10 o'clock, you can expect a pullback. So you could do like a little fade, or you could wait for the shallow pullback, and you could go back into the trend. And then at 10:30 is the prime time trigger time. During the earnings season, 10:30 is not going to be as accurate as the rest. This is a strategy that is outside of earnings season. So this strategy you can apply within the last 6 weeks of earnings season, because that is when you're not going to get the gyration from the momentum created by the stocks that are reporting earnings. Like for example, today, Meta. And then you have the time frames that are correlated again with the market timing. So if you're trading the open from 9:30 to 10 o'clock, I like to focus on the 2 correlated with 5. If you're trading from 10 o'clock, I don't even look at the 2-minute. 2-minute becomes garbage, becomes noise. Then I focus on 5 and the 15-minute. Patterns that are used, you don't need to learn. I teach 10 trading strategies that are, of course, are amazing in my course. But as a beginner trader, you need to focus on just 2 strategies and master 2 strategies that are super simple. Even one strategy. You only need one strategy that is going to generate you money. That's it. And if you learn one strategy and become a specialist in that particular strategy, you're going to make a lot of money. Just wait for that strategy to line up. And that is a pullback buy or a pullback sell with the trend. That's the money generating right there. And of course, you have to measure each and every single time the ESTRP. That is the entry, the stop, the target, the risk, and the position size for your trade. A lot of times in the futures market, a lot of traders are blowing up their accounts because they don't have the knowledge to position size. They don't know how to calculate the difference between the entry and the stop. And they think that if they have a certain size amount in their account, they can take standard contracts and get in. It's like, oh, I have a $50,000 account. I'm going to trade 2 contracts. No position sizing. That's how you blow your account, because sometimes you may have a stop of 5 points. Sometimes you may have a stop of 15 points. So you can see that if you have a stop of 2 points, right? And if you're taking it with 1 contract, then you're going to lose a little money. But if you're having a 15-point stop, you're going to lose a ton of money. So you're going to make money, but you're going to lose more money than you make. So that's the problem with position sizing. Now, the pre-market game plan is based on the market rhythm, especially in the morning. So remember that I specialize in the open, okay? Just like you have physicians that are specialized in, I don't know, in foot pain, and I don't know, whatever. I can't think of it right now, but they have different specialties, right? You go to the eye doctor, or you go to the dentist, or this is how I'm specialized into the open, okay? And when I go into the open, I go with laser sharp incisions into price action to generate based on my system with the position sizing. That's why my account is growing exponentially. So there are 2 things that can happen at the open. You either get a straight move up from 9:30 to 10 o'clock, or you get zigzag. Okay, this is the fleecing. Okay, depending on the volatility on the day, the fleecing time sometimes takes a little bit more than just 15 minutes, and sometimes it could go all the way into 10 o'clock. If you have, for example, news like we had yesterday, FOMC, you're going to see that this chop will continue even into 2 o'clock. So it depends on the market environment. That's why you need to precisely learn how to read the market environment. Trades that develop from 9:30 to 10 o'clock have a very short life, meaning they're mostly scalps, because you have another inflection point at 9:45 that is usually going to produce either a base or a little bit of a pullback. And if not, you're getting that straight move up based on the market continuation. In an ongoing bullish trend, and this could be reversed for downtrends as well, typically the pullbacks are very shallow. Okay, so you can expect pullbacks that are happening from 10 o'clock to about 10:30. The more shallower this pullback is, the better momentum you have for the next time sequence going into 11:15 or 11:30 when the London session closes. And this is when I'm done with trading. But remember that when you take trades within this segment, you're in and out. Okay, so this trade duration is about, let's say you could be in a trade for the most 15 to 20 minutes at the most, where if you take trades, and this is valid for stock trading as well, guys. Remember, I've been trading stocks for over 20 years. So day trading stocks for 20 years, swing trading and investing for more than 27 years. So trades that develop from 10:30 have a longer shelf life, have a longer duration. So these are particular trades that you can manage by a little looser. So here you have a tighter trailing strategy. Here you can trail by MAs, by pivots, what have you, because these trades are going to be a lot longer in duration. Okay, so how do you prep for the day? First of all, you have to check your economic calendar for releases, right? So check out to see if there's news coming out at 10 o'clock or what have you, 10:30 or so on. Check the earnings calendar. I know this is futures, but you got to do it the right way. So you have to check the economic calendar. And in fact, on Tuesday, I had a presentation on how you can rock this market and sinking your thing into the futures market and be a rock star. Okay, you could have done it. If you've seen the presentation that I've done on Tuesday, you would have rocked NASDAQ, and you would have rocked by trading Meta earnings into NASDAQ. It was amazing. I mean, hello, just watch that presentation. It's less than 1 hour. Okay, and you took advantage of that. By the way, NASDAQ had a move from 650 to 15,900. Meta, thank you, Meta. So if you traded that for the overnight, you already came with mega profits into the trading day. So yeah, economic calendar, again, very important, earnings calendar, and then perform your pre-market game plan. You got to do your pre-market game plan. This is the one thing that you cannot go without. You cannot get up in the morning and say, poop, I'm going to trade the mini S&P. And then poop, I'm going to jump in. I don't have any patience. I'm jumping in. And you're wondering why you're losing money and bleeding money and blowing up your accounts, because you're not organized and you're not putting a lot of thought in your trading. You need to have multi-time approach to your anything that you're doing, anything that you're trading, whether it's stocks, futures, commodities, anything that we're doing, cryptos. You got to do the multi-time frame analysis, top-down analysis. Start with the highest time frame, go to the smallest time frame. Remember that the highest time frame dictate what the smallest time frame need to do, and know how to correlate them. Because if you have a buy set up, lining up on a 4-hour chart or a 1-hour chart, for example, in NASDAQ, you're not going to start shorting the 5-minute in NASDAQ, right? That's how you lose your money. And zoom in on that technical execution chart. Determine your key inflection points, determine the key trigger locations. Remember, we're doing laser shot precision. So when I want my entry, I know exactly where my entry is. I'm not winging it and saying, oh, I'm just going to get it into the 850s. Yeah, I think just about there. I think it's just about an area. It's just about like every cloudy. It's like, no, my entry is like 857 and my stop is, I don't know, 825. Okay, so I know exactly where they are. And determine relative strength and weakness on the indices, because that's how you're going to make money. Okay, don't be just super focused on, oh my gosh, I'm just trading the mini S&P. All right. Okay, earnings reports, guys. We're in right here. Next week, we're going to have like a big, massive week as well. And then we are sliding. So this is the time where you're going to focus more on those 10-30 continuation plays, because the bulk of the action is already gone. And like I said, we already went through this, you know, how to correlate your time frames to the timing of the day. I'm not going to get into it again. But if you want to learn how to trade, you know, and how to find when a trade, roll up your sleeve, and literally you have to learn how it's done. We trade with a structured approach. We teach traders how to trade live every single day, a super highly technical system. And I'm not just saying that I have the successful system. It's just that my personal performance for my personal account demonstrates that I have a real good system that enables me to make a lot of money into the market. And I'm not just talking money, I'm just talking a lot of money in the market. And this system trades in sync with the institutional money. I'm not shorting against the trend. No, I'm not. I'm respecting the Wall Street rules. And this system allows me to make money in the first 2 hours where some of the traders are just waking up, right? And enables us to profit from really powerful momentum moves at specific times, locations, and precise technical patterns. Who else does this? Who else has results based on specific times, locations, and precise technical patterns? Do you guys know? Algorithms. Okay, algorithms. Our method overrides any kind of news event because we're not focusing on the news events. We're focusing on the events that are happening and how these events are modifying the structure of the chart, or maybe not modifying and, you know, just continuing to power through. So trading is like learning how to drive. At first, it could be extremely overwhelming. Think back when you were 16 or 18, because you have to keep track of your gas, your brakes, your mirrors, so you don't crash, so your head is spinning 180. But once you get used to it all you have to worry about is getting to your destination, because it comes second nature. Like now when you get in your car and say, I want to go to Costco, do you really think, okay, I buckled my seatbelt, I'm adjusting my seat, okay, I have both hands on my wheel, you know, I'm looking left and right. No, you don't do that. That becomes second nature. This is how trading is for me right now. And this is how trading could be for you right now. You have to keep track in trading of your entry or stop, right? And your market conditions. Why? So you don't crash. You position size correctly so you don't blow up your account. But once you get used to it all, it really becomes instinctive. So I have an invitation for you if you want to join our live futures trading room. This is the trading room that provides you an 100% guided system. So if you don't have a system that is going to allow you to identify trades, know how to trail, we're holding your hands. I'm holding your hands. Okay. So Monday through Friday, 9 a.m. to 11:30 p.m. 11:30 a.m. not p.m. Sorry. So for 2.5 hours, you're going to be with me. Sometimes you're going to be with me only 10 minutes a day. Sometimes you're going to be with me an hour a day. Okay. It's only $299. So you can visit our website. This is the website right here. I just have 2 minutes left. This is the website right here. You go to TradeOutLoud.com under services. That's the futures tab. And we do have some options for you. If you just want to test the room out and say, you know what, tomorrow's Friday, I just want to get in for one day. You have the options. This is not renewable. So this is a one-day pass. You come in for a day, bye-bye. If you don't like it, you don't sign up. Okay. You don't make money, you don't sign up. I don't know. For some reason, I don't know. Then you want a 5-day pass. You really want to start it on Mondays, not on Fridays. This is $100. And this is going to give you a flavor of the room. It's definitely an experience. We're going to give you we're going to send you a welcome letter where you can have like all the details. You got an yearly pass and a monthly pass. Most of our members are yearly pass. When you get into the room, you're going to have access. If you're a monthly member, you're going to have access to the performance portfolio. What this does, you're going to have a track record of all the trades that were called in the room. We also have a track record of all the trades that I called with timing in the room. So they're backed up by the recordings into the room, the recordings that are coming from all the trades that I type into the room. So they can be verified. It's no BS. So you have all the trades in here. You can see them right here. Okay, all the trades, month, July, whatever. This is August. We're almost done with July. Most importantly is that you also have access to the performance portfolio. This is my account. Okay, these are all the trades that I take from January. Okay, you have them right here. Track record. Show me a trader that does show this to you, what they do in their personal account. This is February right here with all the trades. This is March. This is April. This is May. Yada, yada, yada. This is June. Look at the performance. And this month I made 53. I usually make around 50 to around 50,000, let's say, per month. By the way, July, it's not yet. It's not done yet. So that's going to be posted. You're also going to get access to, I think my time is up, but you're also going to